Okay, everyone, the stock market top, I believe, is in. I'm going to show you in this video why I'm seeing that in the charts and why I think we might have just made a top in at least a short-term top, but likely a longer, more sustained top in the market. At least until the Fed comes out again and does something crazy. So obviously there's always that, but technically the charts are set up for a move down. All right, we're going to get right into it. Leave me a thumbs up. Here we go. Triple Qs. This is the main reason why I think the top is in. SPY broke down a couple days ago from its trendline support, and we were waiting for the Qs, and there it is. There's your hourly breakdown right there. Now, it is just an hourly breakdown, so the only thing, that could foil this is we want to see a daily breakdown. Here's the daily chart. See the trend line coming off the March 2020 lows? We were walking up this trend line, hit it right there on support, and then recently we've been kind of wedging out a little bit. And this is a perfect. This is a very clean chart as far as I can tell. You have a bearish rising wedge right here. You have an overshoot of that bearish rising wedge to the upside, but not a very sustainable overshoot, and it was fleeting. Basically was sold off, came down, and now we're finally breaking that support line. So again, you want to see the daily close, but I suspect we're going to get it. And if we do, then that's a broken trendline support. We also have big negative divergence on the daily chart. This big negative divergence should likely lead to a change in trend. And so where do we go? Well, I think the target in the short term, where we're likely to get a bounce, is down here at about 278 in triple Qs. That's going to be a drop of about 10-11%. I think that's in the cards, and quite possibly a lot lower. So that's what I see in the triple Qs. We're now breaking trend. I am short. I've been short the SPY. I just started shorting the Qs, and it's rolling. So we're going to continue to watch this. And look for that daily close. Obviously, there's always the possibility that they're going to run up and recover the trend line and close it back above and just give you a fake out. But looks pretty believable. Here's the SPY. And you can see the SPY obviously has, the SPY would have a lot of work to do. You're going to have some sort of news catalyst come out, maybe the Fed, I don't know, and try to save this market if we're going to get some sort of impulsive ramp higher to close back above support on the SPY. So we've got a couple days of selling. There's your breakdown of trendline support. This is coming off the March 2020 lows, and it looks very similar to the triple Qs chart. We had that sell signal the other day, and now we got it on the Qs. So basically tech is breaking down. Let's look at tech here real quick. Apple, false breakout. This is really bearish, basically. We had a false breakout. So on the daily chart, you can see here's your former high right there at 138. And we broke out, everything looked good for a couple days, looked like a breakout. It was a breakout, but in the last 2 days, impulsive selling breaking back below. So false breakout there. And we also broke trendline support off the March 2020 low. So there's trendline support. Been walking up that thing right there. We broke, recovered it, and now we're breaking it. So yeah, they could recover it again, but it's a breakdown as of right now. So I'm looking for lower prices. Microsoft still has that breakout. So here's the trading channel, the sideways price action Microsoft's been in on the daily chart. We broke out. Looks like we back tested. We're still hanging in there. So if you see that false breakdown, if you see impulsive selling and we come back below this level of Microsoft, that's just more proof that there's potentially a lot lower prices coming. Okay, let's look at the dollar. So the dollar hasn't broken out yet, and that's the one thing, you'd want to see the dollar start to break higher, and we're not quite seeing that. So we'll just watch that. And it's still holding in there. It's just kind of range bound right now, looking for the break, really the break out of this sideways range here. They popped gold this morning, and I was watching that. They kind of made it look like it was going to break out, which was interesting. But They've since faded it back below the range. So again, we're still just in this big sideways range since, you know, the beginning of January basically, and we need to see some sort of move, some sort of direction before I take a position on this, because I don't see any bullish divergences on the daily chart. So I'm thinking we get lower prices in gold, just slightly lower prices down to the 1750. That's the area that this is going to look like a more promising area to go long on gold. So I'm continuing to look for that. Barrick does look a little bit more bullish when I look at this chart. We've got on the daily chart, we now have bullish divergence right here. You can see there it's starting to build. That new low that we made right there put in a higher low on the momentum. So that's bullish divergence that we're seeing on the RSI and on the PPO. And we also have this support line right here at about 2250 that was broken right there just the other day and has since rallied back up and recovered that. So that's a false breakdown, bear trap basically. And we have bullish divergence. So this actually looks pretty constructive. And so I'm definitely watching this for, to watch the price action, because it does have a bullish setup. And ideally, I think we need to see gold start to rally. And we also have this trend line that's about right there. So that'd be about your buy signal. If this thing wants to break above this area, we'll call it 23. Right now it's about 2340, but we'll just say 2350. A daily close above 2350, and that's actually a bullish breakout. And we have the bullish setup there, so that is very possible. I'm open to that. The financials, XLF, just kind of hanging in there, not starting to break down, but too close to call. This is the area right in here that is a major pivot point, basically, we'll say. And if you go back and look at the daily, this is the trend line that comes from all the way from 2011. So walking up there, and you can see as I scroll in, there it is. So if we break down from here, then this was a false breakout. All right, this was a bull trap. I think that's what's going to happen. I'm short the financials, and I am shorting the financials using Citibank. So there's Citibank, down 2.5% today. Still kind of range bound within this little consolidation range, but again, the markets look like they're breaking down, and I think if that continues and we don't get that daily kind of they call it a stick save, but you don't get that daily close in the triple Qs back above that support, then I think it's likely that the financials are going to continue to break down. Citi's going to continue to break down, and we're going to see lower prices. And again, Citi already has the false breakout. See how it broke out above, made a ramp right here. Everything looked great, and then boom, just has collapsed since then. So in general, this is what I was talking about when I was getting into the trade and pointing out the negative divergences and the reason for the trade. It's now, actually playing out as I expected. All right, let's look at oil. Continuing to sell off. Oil's looking pretty weak. That's further confirmation that the market's going to sell off. Oil and the S&P 500 oftentimes trade in the same direction. They trend together. You can see XLE continuing to sell off. So XLE's been selling off for a while. And I pointed this trade out, really back here where we had negative divergence. See the negative divergence right there? And so that was a divergent high. We were coming into an island cluster reversal top right in here. There's supply right there because, that's how it works with trading, technical analysis. People look for those patterns. And sure enough, hit that resistance right there at about 44.76 and have been selling ever since. So that thing from the high there is down about 11% so far in energy. And I think we're heading lower. So I'm looking for 34.24, and that is, continuing down. We also, actually, I could probably mark this out. There's also a support level. It looks like right about in this area. I'll have to tighten it up. But we probably will get a reaction right around there, 37.70 or so. And so that's where I'd say that we're heading, I think we're just heading straight down to that area. Okay, let's look at Nike. You can see Nike, Nike just looks bearish in general. There's nothing that's changed here. We've got this uptrend line right there, bearish rising wedge right in this area. So that's a bearish pattern signaling that we're likely going to break to the downside. And then we also have bearish negative divergence there on the daily PPO. See how the momentum is was fading, where even on the up, the price continued higher, but the momentum just was less, and that signals that the stock's losing momentum. And that price is likely to reverse. And then you wait for a break of trendline support. So there's your break of trendline support right there. Back test the trend line from underneath, which is now resistance, and then roll over and clearly downtrending now. So we're going to ride this trend down. I think we're heading down to honestly on this one, I think we're heading down here, down to about $100. So we'll watch for that, but that's where I think this thing's going. Over the long term, it's not going to get there all at once. It's going to take a little time. Oh, and looking at the hourly, I pointed out, I think yesterday I said, okay, I added back to my short. So what I did is we fell to support. I covered some of my short position down at support. We bounced back up to resistance. I added back that position short. And sorry, you got to take this phone call. Okay, and so added back to my short, and then obviously I'm looking for it to come back down to support. And next time we're down here, I'm thinking we're breaking that support. So that's continuing to work. What else is working? I mean, most of these are working in general. All these shorts that I pointed out, they're all working. Qualcomm's, they're catching a little bit of a bid today, but again, it's below trend. So you can see here, here's your trend line in Qualcomm. Your daily chart, negative divergence on both PPO and RSI. We broke trend. They're kind of trying to back test it. But again, it's getting rejected and selling off. It's losing momentum. And the rest of the market's selling off as well. So this should come down. Tesla looks like it's about to break. And when this one breaks, it's probably going to be pretty brutal. So obviously I'm short this. And not quite profitable on it, but again, I was kind of building a short position over time. I was telling everyone how I was doing that. Because this thing was in a frenzy. It was running up like 20% a day. And so I was adding small amounts as it was moving higher, looking for the momentum to break. So I stepped in a little early on this one. I just, I felt pretty good that it was going to break. So, and I just didn't know when. That's why I was kind of staging into the short. Now we've broken trendline support. So there's your support on the daily. You had a breakdown. That's an impulsive breakdown too, because it came in the form of a gap down. So gap down, kind of hang down there. And then now we're starting to see some more selling. So I am looking for this to head much, much lower. I've got trend lines all the way down here. First one, I think we're heading down to 469 or so. And yeah, that's a ways down there. I mean, what are we looking at for that one? That is a potential 40% drop. We might find there's a little reactions right in here. You can see how we kind of, battled around in there. So maybe we get a level right about there, which is 623. That's probably the first target before you get a reaction. But I do think we're heading much lower in this. I haven't talked about this one for a while. Fedex, you can see, continues to work. We're clearly downtrending now. So there's a lot. We're in the area now where there's really no reactions. So I think we're heading straight down to this gap fill right down here at about 184.51. And that's just going to continue to trend down. We'll probably run into the 200-day moving average and get some sort of a bounce right around there. That's very common. But I do think we're heading down to fill that gap. This one, from the time I pointed it out, which was all the way up here when we broke that bearish rising wedge, is down about 20%. So that's quite a bit to the downside. And I guess I'm going to wrap here. I'm going to get this video out where the market's starting to continue to break down. So I want to make sure everyone has kind of, has this video to make their own decisions. Again, everything in this channel is just my opinion. Nothing's trading advice. I'm not a financial advisor. And again, so that's that. These are just my ideas. Moving on. I'll catch you guys on the next